Okay. So that's what you use for trading?
Yeah, I usually do it on my phone, on my MetaTrader.
Mm-hmm.
I just look at it on my phone. I don't really use the computer because the phone is something I'm
But
better using.
what is it mainly that you're looking for?
So what I look for is I look for the zones that it's resisting and supporting off of.
Mm-hmm.
Right here, I would probably draw something like, let me see,
Okay, so right here, if you were looking to take a trade, what would you do?
what would I do? I would look for an entry point, like a zone. So like it'd be like here.
Mm-hmm.
I would put in a sell if I see like the price rejecting off of this zone.
Mm-hmm.
Look for a buy, like be around here, this area. Maybe
Mm-hmm.
a little higher than that, like right there or something.
And is this way too inconsistent, or
Um,
what is the problem with it?
it's just that I'm not I'm not getting it as much as I'd like to. I'm like my win to loss ratio isn't
Okay.
as high as I want it to be
Not that
to
it's
reward.
not giving you the profits you would like to,
I'm sorry.
right?
What did you say?
It's not giving you the profits that you would like to. It's not giving you that consistency.
Right.
All right. So remove everything from the chart, the indicators and the MA. Okay, so go to a pair like, let's say, GBP USD. Okay, first thing, always go to GBP USD again, search up GBP USD. Okay, always use forex.com
Okay.
because FXCM they gap the market and they move the market, and their closing time is not New York time, and the one we always want to use is New York time.
Okay.
Right? So FXCM and I mean forex.com, and which one's the other one right there? The
Oanda.
Oanda, they both use New York closing time.
Okay.
So you could use Oanda or forex.com. I personally always use forex.com because they're always reliable on their candle closures. So I like to use TradingView to analyze, and well, an MT4 on my MT4 for my broker, that's where I trade it. but I usually like to trade better on TradingView.
Okay.
All right, so right here, go to 4 hour. Okay, can you do the market structure? Like right here, can you do in this, like even right here in this trend alone, can you do the lower lows and lower highs?
Lower lows and lower highs.
Start
Like
from
on
the top. You could just do it from right there. Start from all the way from the top.
right here.
Yeah. Just either do a rectangle on top or a circle or whichever, or a line. Just, yeah.
Okay, that's the high. I would say this is the lower low right here.
Just draw whichever you think it is, and then I'll go over it.
Okay.
Like how you would draw it or how you've been taught to draw it.
Like that?
Okay, so this is your bearish market structure, right?
Right.
Okay, now go back. I want to see something. Go back on the chart.
Oh.
It's a place where, because right here this market structure is pretty clear.
Right.
Go
So
more back.
uptrend. Okay.
Right there, right there. Start right there at the bottom. Around November.
Right here.
November, yeah. Right there. And do the market structure up right there.
So it's bullish. So like draw the line again. Like from here.
Yeah. Do that market structure pushing up. All right, all right. All right, now let me show you that same market structure, right? You see how you have it?
Right.
All right, let me show you this market structure. Let me share my screen now. Because the first thing is market structure. And it seems that you know what you're doing with it, so that's pretty good because usually I get even people with experience and I tell them to do the market structure, right?
Right.
They don't really do the market structure right. Let me go to GBPUSD. But it looks like you know what you're doing, so this should be simple and easy for you. Alright, so because my first step is always market structure. So right here, right?
Right.
We started here. And the reason I say it's important is because most people overlook it because some people that I tell them to show me market structure, they come with the whole, they start plotting out everything. And this, like this right here, is completely wrong, right?
Right.
Like, I'm glad you didn't do that because majority, they start off like that. Now, the second one that you did right now, this one is correct, the one that you're doing, but still the market structure is too big because after you did this one right here, this pullback right here, you did this big push up to the upside right here, right? Like this,
Right. Right.
right here. And this would be correct if you're swing trading, if you're analyzing on the daily, because this would be a whole daily move. But if you're trying to analyze on the 4 hour and the 1 hour, if you're trying to enter trades throughout the day or throughout every day, like day trading, then this market structure would not fit in the 4 hours, right?
Right.
Because it would take you forever to enter a trade, right? And market structure in this case right here, remember the new higher high is created after the previous higher high is broken, right?
Right.
Because another one that people do is you see this push here, right? Because this one confuses a lot of people. After you have this push here, if this push here, if this would have broken down here, would this be bearish or bullish?
Bearish.
Okay, this is why I'm saying that it confuses a lot of people. In this case right here, even if it pushes down here, it's still bullish.
Because
And
it
the reason it's still bullish because this is the market structure, right? This was the previous higher low right here, this one,
right. Okay.
right? We will still be in a higher high, so it doesn't matter if we push down here, right? Because if it pushes up here, and then if it pushes down here again, this market structure, even though it's being bearish right here, we will still be bullish, right? Because this is the previous higher low, it has not been broken. And the previous higher high has not been broken, and we have not made a new higher high, right? So in
Right.
order for us to determine the new higher low, we have to make a new higher high, or we have to break the previous higher low in order for us to be bearish,
Right.
right? So on the 4 hour, this is what we're looking for. Like in this case, yes, it did do this, right? It did break up here. Like even though it went all the way up here, it still went all the way up to here. But we're not trying to look for trades on the daily, or we're not trying to wait a whole week to enter a trade,
Right.
all right? So once it breaks right here, you see how the break is very clear like this,
Right.
right? So once it's very clear, this is your new higher low. Now this one is the one that has to be broken in order for us to be bearish. Because even in this market structure right here, you see how it's moving sideways. You see how people would call this a consolidation zone right here,
Yeah.
right here. Even though it's consolidating here, right there. Let me remove everything again. Even though it's consolidating here, price is still moving upwards because we're still in that upward push, because we know here that this was our last push, that we broke that market structure like this, right?
And the higher low wasn't broken.
So right here, even if it's the next candle afterwards, this candle is the pullback already, because you see how it drops down to here, right?
Yeah.
So this is where it went, right? So up to here, this is the farthest we've pulled down, right? After we made a new higher high, this is the highest low we've created, right? It has not broken below it, because even if it breaks below it, we're still bullish, right? As long as this new higher high, as long as there's no new higher high, right?
Right.
So even when it's consolidating in this small area right here, after it drops down to here, you see how we do create this new higher high right here where it breaks above it,
Yeah.
right? Right here, because it's a clear break, right? So I always like to put my arrows like this. So I like to see if there's room. If it's just a little bit, if it's like a couple of pips like this, if it would have broken like this, I wouldn't have considered it a new higher high, because it's not much room, right?
Right.
But especially on pairs like DJ, like right here, right? So this was a 33.98, and it broke all the way up here to 34.40. So it's like a 40 pip breakthrough, right? So I would consider that a break,
Right. Okay.
right? Because you could see the difference. If it's just like 10 pips or 10, 15 pips, I wouldn't consider it a break. But since it did 40 pips, then I consider it a break,
Okay.
right? So right here, once it pushes up here, now we know that this one was the new higher low. You see how it still has not been broken, even if it was one candle and it went down here,
Right.
right? The market structure is still respecting it. Look, it comes down here, and then it pushes up. It makes a new higher high, and then we have this market structure break, right? We break the higher low, right?
Right.
And then now, since we're bearish, we make a new lower high, and then we make a new lower low, right?
Right.
So this is why the market structure on the 4 hours, because even though the way you did it is technically correct, that would be for the daily, right? If we were trading on the daily, like I don't like to trade daily because I feel like you wait too long, and especially people just starting, you're not gonna see any real profits swing trading for days,
Right.
right? So even though this is correct, I'm gonna need you to, because since this is the first step, because every trade that I take, my first step is finding the market structure, right? finding if it's bullish or bearish. And the way that I do that, even like if I was doing GBP/USD, right?
Right.
Even if I was doing GBP/USD live, right here, I would go on the 4-hour and I would find that market structure, right? Like that would be my first step. I would be like, okay, checking for the pushes, right? See what it's doing, see what it did, right here, right? So this is my the for this a pullback, right? So this is the lower high right here.
Right.
So I know in order for us to be bullish, this has to be break. This has to break, right?
Right.
And in order for me to to make the new lower high, I know that a new lower low has to be created in order for me to consider this the new lower high, right? Because
Right.
even if it pushes, if right here, if price pushes down here, and then it pushes up here, I know that I'm still bearish, because now you see that the market structure right here would look bullish, right?
Right.
Like this, especially if it pulled down here and then it pulled up here. The market structure, this market structure alone would look bullish, but technically we're still bearish since this was the last push, right?
Right.
And in order for us to be bullish, instead of this market structure, we would have to have a push above it. And then when it breaks it, then I know we are in a bullish sentiment now. So now, even if the push started from down here, right? I know that I'm gonna look for that pullback, which would be step 2 and step 3, which I'm gonna be showing you how I enter trades and what I look for to enter trades. But for now, because I want you to have this understanding of market structure to the point of, once you enter, you see how I just got in GBP/USD and did this analysis and be like, okay, so I'm here. I know I'm looking for my sell because we're on this bearish market structure. I need you to start spotting that like right away, like whenever you open up a chart, that your mind goes to that automatically, right? Because on Euro AUD right here, right? Right here, we have these big pushes. You'll start to understand why I'm trying to take this trades that happen with this moves right here, right? We're not trying to find trades in the middle, right? We're not trying to find these trades in the middle where they take forever to play out. We're trying to find the trades that have here. And I trade something called the volume zone. So that's gonna be step 2 and step 3. All right.
All
So
right.
what I want you to do is I want you to grab 10 different pairs, and on 10 different pairs, I want you to do this. I want you to do this market structure, right?
Okay.
I want you to do the 10 different market structures just like this is how I did it. And then point out if it's bullish or if you're in a bearish trend, right? And again, don't avoid the whole move how you did it down here, right? On GBP/USD, avoid those big swings. Like, don't zoom it out too much to this point, because it would be like you're doing this on a daily, right? If you're doing this like this, right? Even though
Right.
it's technically correct, this is like you're doing a daily, because this is from the 12th of November to the
Right.
3rd of December. So this is like you're analyzing on the daily, right? So zoom it in and not too much as well. And if you're avoiding that, also avoid doing this, the little moves, right?
Right.
Like this, just marking everyone, right? Just how you did here at the beginning. I'm sure you're gonna get it on your first try, but everybody learns different. So I'm not gonna rush you. I'm not gonna tell you to have this done by tomorrow or the next day. Do it whenever you get it done, whenever you're done with it, whenever you did the market structure, whenever you feel comfortable, like, okay, I got it, like it's correct now. Then send the charts to me. I'll look them over. If I see any of them wrong, I'll tell you, can you fix this one, or can you fix that one, or can you tell me what's wrong with this one and why it's wrong, right? Like, especially on examples, and that's why I give you this example right here of what would happen if this one pushed up here and then it pushes down here, right? That you said bearish, but we would still be bullish because this was the previous higher low. Because that's the one where it catches most people, especially once you start trading. It catches people off guard of thinking, oh yeah, push down here, we're bearish, and it'll push down here, and then it'll make a new higher high, and people like, or it'll do this pullback up here, right? And then they'll start seeing some sort of rejection, and they'll start selling, and then it'll just continue pushing up. And it's like, well, if you would have seen the market structure just by simple market structure, you know that this would still be bullish, right?
Right.
All right, so do 10 charts, any ones you like, or if you trade a specific pair or a specific thing that you're trading, do those if you want to, right? And then send them over to me through Telegram. Don't send them through here, and send them through Telegram, and I'll look them over, and then we'll set up the next sessions once you get through that. Once I see them that you did them correctly, like I said, like even if you haven't done by today and you want the next session by tomorrow, like we can do that, because yeah, like I said, it's simple to some people. To other people, it's not that simple. Like it took them like 2 or 3 tries, but it looks like you understand it. So that's good since you're starting a little bit late. All right.
All right.
All right. So do the 10 charts and then send them my way. And again, just like this, just simple. Right. Just if you want to do the arrows, or if you want to do the brush that you were doing, that whichever one works best for you.
Okay. Got you.
Right.
All right.
All right, man. Well, I'll let you get to it. And then again, oh, if you have any questions, like as we get through the sessions, like it'll stay recorded right now, and all the rest will stay recorded. But if you ever have any questions or any doubts, especially when you start live trading, like just message me and I'll get back to you.
All right.
Right?
Thank you.
Message me through Telegram with your questions. But like how I tell people, I cannot help you if you don't ask me questions, right? If you don't tell me what's holding you back, I'm not gonna be able to help you, because I have 2 types of student. I have the student that they say they're shy and they don't ask me, or they don't want to bother me, and they're stuck in something and they don't really understand it and they don't ask me. So, and then they come back like 2 or 3 weeks later and they're like, hey, I haven't really done this correctly. And I'm like, and then we go over it and I'm like, if you don't understand it, I need you to ask me. And then the students that are being more profitable, they're the ones who always ask me, hey, I don't understand it completely. Can you like go over it with me again? Or can you tell me if this is right? Or can you tell me if this is wrong? They're always asking me questions, right? And I would prefer that you ask me questions instead of you just being silent and not texting me and just going with the flow.
Okay, I got you.
All right.
I
All
appreciate.
right, man.
All right.
Well, again, thank you for trusting me, and we'll keep those goals that you send me in mind. Like always, like what I like to do, like in that situation, like I do it at the beginning of the year, right? So I set out my 3 main goals for the whole year, and I always like to look at them in the morning when I wake up, and before I go to sleep. So that way I always have it on my mind.
Okay, I got you.
And that way I feel accountable. Like if I start slacking, or like maybe by the end of the year if I don't complete one of them or two of them, like I could tell myself that I didn't do it because of me, because I had written them down, right? Because if you just say it and you never write it down, if you just say like, oh yeah, like this week I'm gonna work out, and then you don't work out, you you don't really feel nothing, because you just told it to yourself, right? You don't really put it out there. But if
Right.
you write it down and you say like, this week I'm going to work out, and then by next week you didn't work out, and you look at it in the piece of paper like on Monday, you're gonna start feeling that sort of failure that you need to feel because you didn't do it.
Right.
All right.
Got you, man. I really appreciate it.
No problem, man. Just again, give me all the ambition you have and show me that you really want it, and I'm gonna take care of the rest.
I got you, man. I'm trying to go all in on this. I'm putting all of my energy toward this because I know I can change everything in my life and like actually put in the work that and get back in return like from the work that I've put in.
Mm-hmm. All right, man. Well, let's make this a year.
This is gonna be a great one,
All right. Talk to you soon.
man. See you. Appreciate it.
All right. Bye bye.
Structure involved.
All right, I'm gonna go over. Have you used Fibonacci before?
I have, but I never really like knew how to use it.
All right, can you see my screen now?
Yes, I can see it.
All right, so let me show you the basic structure of how people intend to use it, and how it's like, because the way most people use it and the way most people are taught is wrong, right? And it's just confirmation. It's just another confirmation of us entering a trade. All right, so I'll send you the settings like after I show them to you.
Okay.
Send you my settings, but um, Fibonacci like this, right? So on a bullish market structure, you have if you have a bullish market structure, then you have your pullback, you have your move, right? Like this.
Right.
And supposedly, to everyone, how everybody's teaching it is to buy on the 68, right? This is the ratio, right? Okay, the reason I don't like this golden ratio that everybody uses, the 68, the 61.8, is because even if you're using that, even if you just focus on the 61.8, the risk reward automatically doesn't make sense to me, right? Because, well, if you do use that one, I'm gonna show you right now how people put their stop loss, but based on simple market structure, if you're just looking at this, right? Based on this, if you're buying on the 61.8, your stop loss should automatically be below the previous higher low, right? Because you're bullish trend.
Right.
So your stop loss should automatically be down here, right? Nowhere
Right.
in here, because the only way this is a false buy is if the market structure is broken and we become bearish. So your stop loss is down here. And your take profit on any trade you're taking should always be the previous higher high, because there's a possibility of reversal, right?
Right.
So just based on that risk reward, you see how it doesn't make sense?
Yeah.
You see how the risk reward is like 1-to-1? Like, it doesn't make sense to risk that many pips,
Right.
right? And then the one I like to use is the 78.6 right here. Because now, even if you just trade the 78.6 zone, right? Even if you're just trading this zone here, even if you're always buying, this 78.6 zone, it's always going to be close or inside our zone, right? So if we have our zone, if we have like a big zone, right? Let's say you have like a big candle that started to move, a big volume candle, right? Like this,
Right.
maybe this big, right? If you have a volume candle like that big, and or you have a big candle with a lot of pips in it, the 78.6 zone is a more precise entry of, okay, there's a possibility of the trade going in here, right? Like, that's what is going to give you a more precise entry, and it's going to give you an extra layer of support and resistance, right?
All
Like,
right.
so that's the 78.6 that I like to use. And then the negative 20, like our first take profit, your first take profit should always be the previous higher high, like I said, because there's a possibility of reversal, right? And then if
Right.
there's not a possibility, this is the extension, the negative 27. And now, just how I showed you before, just how I showed you last week when we went over how people use supply and demand zone, and how um, we're using volume zones, right? It works exactly the same way for the people using Fibonacci, because look, like, it always makes them believe in that trap, and it always lines up perfectly, right? Like, and then here the same way, like the same way it shows them, right? So anybody who would draw the Fibonacci like this, right?
Right.
The Fibonacci like this, you see how the 50, the golden area that everybody uses, the 50 and the 61.8, you see how it's holding right here? How
Yeah.
it's breaking? and then again, the same thing occurs, like where they're putting their positions, they're buying, right? Because the 50 and the 61.8, it's barely tapping it. So it's like, oh yeah, really good entry. Like I'm gonna buy here, and then I'm gonna put my stop loss below the 61.8 somewhere, right? Below
Right.
maybe here. Like I don't want to risk too many pips, and then something like that happens. Right? The same way, like the same thing happening over and over, like, and that's whenever I post something about like people are teaching outdated stuff, like this is the stuff that I mean, the 61.8, because the Fibonacci, even though this 61.8, even though it's the golden ratio in a mathematical equation, for Forex is completely different, you know? Like
Yeah.
for Forex, like the price is meant to do that to people like that, right? And you see how it taps at 78.6, right? And
Right.
then it pushes up, right? Because even if they would have entered here, right, this area that it was holding, the stop loss should have been in here, all the way down here, right?
Right.
But I don't like to use that because that's too much of a risk. That's too many pips in a drawdown. Like if you ever enter the trade, and then it happens the same thing back here. And like I said, it's always happening. It's always doing the same thing. It'll always start holding that 61.8 in the 50, and then it'll just break it and then push up above it, right, like this. And then you see it again. You see how it's holding the 50 area and the 61.8 right here.
Yeah.
And then again, it pushes down here, and you see this is the extra layer of support that it adds, right? Because it's always going to match up with your zone like this, right? With your volume zone, and that way you have a more precise entry, right? Because on this one, we took this trade with everybody. I sent out this trade, the setup, when the price was somewhere up here, and I'm like, we're waiting for down here to enter this buy, right?
Right.
Like, and for the same reason, and you see this all the time, you hear it occurring, you even see it, like, even when it breaks structure, like, because even for the first couple of students that got in early, that started setting up early, when it broke structure here that we were bearish, right? Because we were bearish, and I told them, okay, wait for the pullback because this structure was bullish right here,
Right.
right? It broke the structure when we were bearish, and I'm like, all right, we're looking for the sell, right? And then we did our fib as well. We added it with our volume zone up here, right? And then again, look, you see how it was, even this area, this 50 area, you see how it was holding right here
Yeah.
again, right? Because once you start seeing this multiple rejection, for the people that are like, oh yeah, broke structure, we're gonna continue pushing all the way down here low, and it happened the same thing, right? Where it's holding right here, multiple rejections and people entering, and then they see this big bullish candle. So once they see the big bullish candle, they automatically think, oh, I got stopped out. Let me buy because we're very bullish. And now they're entering buys because they're thinking, oh, it was just a false break to the downside. We're going to continue pushing up. So they buy, and then the market continues going down, right?
Right.
Or even if they're not using the Fibonacci, they're using this area like this, right? They're using the volume zones right here, the support and resistance area like that,
Right.
right? And they're buying here. And they're like, and again, whenever they see price go straight through it, they're like, oh yeah, it's gonna continue. Like since it broke straight through and there was no rejection, it broke through the volume, through the structure shown, it's gonna continue pushing up, right?
Okay.
And you always seeing that. But and that's why I say like we're waiting for this move, right? Because even right here where it was breaking structure, and this was a perfect setup again, like because once we took this trade, we were in profit, we made that profit, and then it did the same thing, it came back up, right
Right.
here. Then we took this trade as well, and this trade we the way I take my trades whenever I take them, right? Because this right here, this is why I say don't use the other pair, the one that you were using, the um FXCM right here. Because look, I'm gonna go exactly to that spot that we're in, right? Because of this, look. You see this gap right here?
Yeah.
This gap right here is what I was telling them, that because the student, like, he's like, oh, the market gapped up because on the he was analyzing the MetaTrader 4, and it showed him this exact same gap. And you see how there's no gap here, and price right here makes more sense. It doesn't make you think, because when you automatically see this, like this, right? You're automatically thinking, oh, based on what everybody says, oh, let me sell because the market gapped up, and the gap has to always close, right?
Right.
Like when this right here, it puts that in people's head, and then that's where people start getting it wrong, right? And that's why I tell them, like, use this when closing time, because now the market makes more sense, right? It just looks like a pullback, and when the market opened, um, right here, that he saw this rejection, and then he saw this one, I told them, like, no, just be patient and wait for a better entry. So even the same thing right here, right? The zone, and this is what I mean to have a better entry. You see how on this one, you have this big candle that is our zone, right?
Right.
Because it was this big bearish candle right here. So this big bearish candle, and price was down here, and that's why I told them just wait for it to get in our zone, and we're gonna have some sort of rejection. And then, like I said, and I told them right here, the market pushes all the way up, right? It pushes inside the zone, and once we were inside the zone, that's when we were looking for that confirmation. In this case, we get this bearish pin bar, right? This
Right.
bearish pin bar that finishes in the 4 hour. So that was the entry right there, right? So even after we got stopped out and break even in front of our entry, right? Because our short position was like this, right? Like this. This was our short position, and then our stop loss maybe a little bit at top, and our take profit down here, right? Our previous lower low. Because when we entered there on 134, let's say it was 134, the market went all the way to 132.90, so we were like 110 pips in profit. And the reason I like to protect myself is after I'm 40 pips in profit, I move my stop loss in front of my entry 10 pips, right? Because there's no reason for me to be 100 pips in profit and for me to end up losing that trade in negative,
Right.
right? Because most people, they'll be 50, if you're 50 pips in profit, for example, right? Let's say you start taking the trade and the trade is down here, 50 pips in profit. If you're 50 pips in profit and your stop loss, let's say is 50 pips, right? Now, if you're 50 pips in profit and you're making that money and you end up losing this trade, like right here, right, where it pulls back, if you end up losing this trade, that means that means that your stop loss was 100 pips, because there's no reason for you to be blue and end the trade in red, right? Especially this much. I get
Right.
it if you were in blue 10 pips and then it pulls up and then you're wrong, right? And then you get stopped out. But if you're 100 pips in profit and you don't protect your profit in any way, that's just bad risk management, right? Does it make sense? Like, oh yeah, I'm winning $1,000, and I know that my take profit is $10,000, but I end up losing the $2,000 that I initially had set up to lose, right?
Right.
Like, it doesn't make sense. So that's why that's my stop loss rule. Like once I'm 40, 50 pips in profit, depending on the pair, depending how much volatility it has, like that's how many pips I wanted to go. Like for GBP USD pairs that move a little bit, like even though it's volatile, it moves a little bit slower than others. So this one is like 40 pips. I'm moving like 5, 10 pips in front of my entry. For a pair like GJ, that it moves very heavily. That one is like when I'm 50, 60 pips in profit, then I'll move my stop loss. Right, and then this one here again, and then because we were focused mainly, the reason I like to, me personally, I try to trade GBP pairs, and the reason I try to trade GBP pairs, because you see this GBP USD trade or this GBP pair, you see how it has like good structure, right? When it
Right.
breaks one way, like it goes that way. This is GBP USD, and then you have a pair like AUD USD or USD CAD, right? Look on the same time frame, right? The same time frame right here. You see how this one moves like this?
Right.
This whole movement right here is the same movement that GBP USD is doing right here, right? Where the market structure here is more clearer than you analyzing something like this that you're like, okay, like it's just continuing up in the same movement, right?
Right.
Like there's no clear market structure. It's the same. It's the same. I'm not zoomed out more. I'm not zoomed out less. Like it's the same time frame, right? It's December. Look,
Right.
December, right here, right? Same structure. And then right here is in December, and it's not too zoomed out. It's the same time frame, right? But that's why I like to trade odd GBP pairs. Like I'll trade GBP pairs and gold, right? So and then here again, and you see the same thing, and then again, like this is where the fib comes into play. So right here, even though we were bearish, right? We were bearish, we got stopped out of break even, but we had already made our pips on the first trade. So in this one here, it pushes up, right? So we're clearly bullish. And this, since we have this big move, then we had this quick reversal, and that was when the news was happening. When the whole Brexit thing was occurring, right? So you see how you have your zone here, right?
Right.
Right here, your zone on that candle that started that bullish move, because this candle right here was the one with the volume that started that move, right? So, and we clearly made a new higher high, so we knew we were bullish.
Okay.
So
So
same thing, right? The market structure breaks to a new higher high. So again, same setup, right? Like this, same setup like this, right? And
right.
like I said, and just how you asked me to, you see on the 4-hour, this was the entry, right? This was a confirmation. This 4-hour bullish engulfing, right? Because you have this big bearish candle, but then you have this big 4-hour bullish engulfing, right? Even if it finishes on top of the zone, you know that that candle is very strong and there's a lot of volume that is going long, right? So even if you entered there, it's still a good entry, right? With proper risk management, because you have your confirmation, right?
Right.
And then also how you said, like if I go down on a smaller time frame, every time I'm analyzing on the 4-hour, I always go down to the 1-hour to enter my trades, right? And then let me show you that same trade setup right there, right? The same setup, you see the confirmation down here. Instead of waiting for the 4-hour, that same setup, because people ask me, how do you have such perfect entries? And it's, I'm always waiting for that confirmation. In this case, we were bearish. There was no need for me to buy, right? No need for me to buy. Even when I entered my zone here and I'm on the 78.6, I'm looking for my pattern to buy, right? So in this case, I see this pin bar right here, this bullish pin bar, right? So that alone right there could be my first entry. And then let's say, okay, I see a pin bar, but I'm not too confident in that one, or I don't want to get in a pin bar. Then you have your morning star right afterwards, right? Like that. And those would be my entries, and those would be where I was stacking. And even if I enter this, once my 4-hour closes and I want to enter more positions on the 4-hour, because these are my perfect entries, then my 4-hour setup is somewhere up here, right? My setup is somewhere up here, and then I'll enter a trade a setup on the 4-hour. My 4-hour entry is up here, right? So I'll enter the same entry with the same stop loss, like that, right? Because my 4-hour finished up here. And you see how the reason I wait for confirmation is because once I get that confirmation, what that tells me that people entered buy signals here, right? And the reason I don't put like a buy limit or a stop loss or a buy stop or anything like that is because if it comes down here and we have this big heavy pressure, right? We we can say that it's just gonna continue pushing down. But if I see that rejection, that's how I'm avoiding my stop losses, right, or my losing trades, because I'm always making sure that I see that I know that somebody's buying there, right? And if you do something like this and you put like a buy limit, you're like, oh yeah, we're in a bullish trend. Something like news can occur and just what was the pair GBP Jappy thing? GJ on the same time frame, right there when we were trading it was happening the same thing, right? Because all the pairs they move similarly, the same, right? And then before we started the bullish run, it moves almost exactly the same, right? Yeah, so you have this structure here on GJ, right? Where you have your zone right here, right? Your volume zone right here. Because that was where it broke. And then again, you have something like this where news just occurs and just slams through the price, right? And then it starts retracing and then it pushes up. So that's why I don't put a buy limit. And then they all move they kind of move the same, but I still like to analyze them separately. And I seen that you're very active, that you are actually putting in the work. So I'm gonna let you trade this week alone, and then I was gonna let you trade like 2-3 weeks alone, but I'm just gonna let you trade this week alone, and then next week I'll add you to a group. All right?
Okay.
Yeah, because I seen that you're actually analyzing, you're actually taking trades, so there's no need for me to hold you still if you're actually analyzing and you're actually taking trades and you're being active. So the reason I'm gonna give you just 1 week alone, like, is for that, but I want you to get comfortable with it, and that way when I add you to the group next week, you'll see and understand what they're doing. And most of them, like some of them, they'll add whatever I'm showing them, the volume zones and the Fibonacci, they'll implement it to their own strategy. So just how I'm teaching you, right? You can either take a step by step, because any trade I take, even if I trade crypto or anything else, this is my method for everything. But as you get better like throughout time, because that's the only thing missing. Like once you start seeing it throughout time, you'll start understanding how a certain pair moves more, right? The reason I traded this pair like GJ or other GBP pairs is because then you automatically know what's going to happen before it happens, right? Like you start getting so familiar with that pair that you start seeing the moves, or you start seeing the manipulation before it actually happens. Got it?
Yeah, I got it.
All right. So do you understand Fibonacci?
Yes.
All right. So I'm gonna well, you could even take a screenshot right now. Hold on. Take a screenshot or take a picture just with your phone so you could have the settings. Like I said, those are just my extensions. This one's right. The -27 is the extension for the take profit.
Okay. So I had one question, and it's on the GBP pair. When you were doing Fibonacci on like the 14th
All right, share me your
of
screen.
December. Yeah, I had a question on the breakup structure.
The what?
The breakup structure on December 14th.
Mm-hmm.
Could you go back to it? It was like when you did the Fibonacci,
Oh,
or can I
it
share
was the
my screen and
Fibonacci?
show you? Could I share my screen with you?
Yeah. Go ahead.
Okay. Do you see my screen?
Yeah.
Okay. So, okay, I see. So I thought at first, I thought this was right from here, from this point to here was the breakup structure. I thought that was it.
For the what?
for the like the
Okay,
break
okay,
of
okay, okay.
the.
Let me. You thought that was the volume zone?
Yeah, I thought this was right here because that was like the last time
Okay,
it pushed
okay.
down before it went all the way through.
Let me share my screen, all right?
Okay.
Because um, that right there that you saw, the what you call it, the remember the Euro AUD trade that I told you I was gonna show you why I entered, right? The setup, the one that I sent you that I sent out to everybody. That they wonder like why was
Yeah,
it on there?
came back down to the volume zone, right?
Right here, right? Is it exactly the same way, right? So right here, this is our initial volume zone, right? This is the
Right.
initial volume zone that actually breaks the whole structure, right? But then you also have this volume zone here, right? This volume zone right here that started the move that made this break to the upside, right? Right here,
Right.
right? Okay. When this one becomes invalid is because you see how price starts to drop down here,
Mm-hmm.
right? There's no confirmation here to enter that buy, right?
Right.
So automatically we move to the next one right here.
Okay. So
This would have been the next one to enter the trade. And it's good that you caught that, but I don't want to confuse you, but you're understanding quicker than others because right here you have the same thing, right? You have this push here, and then you have this pull down right here, right? And then
right.
you have this push right here, and then we make this double top if I was to break, and then this pullback, and then this push, right?
Right.
Right here. And this push, this is the volume right here. This is the volume zone that made that breakthrough, right?
Right.
So even right here, where you have this three, like you have the initial volume zone down here, and then you have a volume zone here, and you have a volume zone here, right? Our most important one, it's always this one, the beginning one, right?
Right.
I know that even though this is my most important one, I know that I have a volume zone here because this is where buyers enter to make that new higher high, right?
Right.
So automatically, this is my volume zone here too, right? I have my volume here. This volume zone, this is where people enter the buys. This is where they add in
Right.
positions to make that breakthrough to the upside, right? Once it comes down here and I see rejection, yes, my entry is still like this, right? That's my entry in there, my stop loss below, and my take profit up here, right? But
Right.
if I don't see any confirmation in price, and that this is what I was just going through over, like that I don't enter my trades just where it's at, but I wait for that confirmation. If I just see like a candle just completely break through it, I'll be like, okay, then it's going down here, and I have the same type of entry, right? I look for the same type of setup down here, right? And then I put my stop loss here because it's always it's always how much you're risking and how much your reward is,
Okay. So
right?
so so basically, when it breaks through the previous volume zone, you just go to the volume zone that was before that one.
Yeah, and this right here, I'm showing you this because you'll see it sometimes, right? You won't see it all the time because usually the market structure that you will see, usually the market structure doesn't do this, right? But usually
Right.
when it's breaking the trend the other way, you'll see it. But the market structure will rarely do that. Like usually you just have the comeback to the initial one right here, right? So this is
Right.
the initial one right here, right? Usually, like this one right here, because this is the market structure. Usually, whenever you see something like this, right, it's on a bigger trend or on a bigger move. Like that's what I mean, right? Because you have this one, and then you have this push down here, right, and then you have this push up here again, and then you have your zone down here again, right? Like usually, this is what you will see. Like especially like even if you do it in real price, like usually you'll have those moves, you won't see them. So right here you have this move, right? You have this push down right here, and then you have this push right here, right? So this is the move right here, right? We had this push to the downside right here, and you have that retracement, and then you have your zone right here again, right? So right here, right? Because we're bearish. So you have movement right here. You will rarely see that, like I said, right? That when you start seeing is, it's either because the trend is going to change, or because like on that one, it started to break those previous higher highs for the year, like in this case right here on GBP USD, right? Let's say because right now we're bearish, right? Let's say it starts to go bullish. So in this bullish scenario, you'll have maybe a push up here, right? And then you start seeing your rejection, and then you'll start pushing down, right? You start pushing down like this, somewhere down here, and then it'll stop. I'm saying it'll stop here because just based on this right here, based on the left, right, like that. But it won't go all the way back down. And then once it starts pushing down, it'll start something like, okay, now it breaks the previous structure, right? It breaks this, so now we're bullish. But since we broke through it, and since it's breaking structure, this is where you almost likely see something like this, right? Where it pushes maybe all the way down again, like this, right? And then it pushes up here again, and it makes a double top, right? Just how you saw it before, like this. And then it'll fail to break it again. You have this minimal pullback, and then you have the breakthrough again, right? Like that's when you start seeing it. But once you see that breakthrough and it starts trending, then you see it again. Then you will most likely not see it, because then it'll just start trending normally, right? Usually, whenever you see this sort of structure on the, let me show you. You understand what I'm saying, right? It's usually at the end of a trend, or when it's going to break a certain zone, that it starts doing this little kind of pullbacks.
Right.
So where it's happening is on Euro AUD, or where it happened. This is Euro USD, right? So I know, I'm pretty sure for the last couple of months, Euro AUD has been bearish, right?
Right.
It's been bearish right here at the end of the structure, and it's exactly what I'm saying. Right here, we're right here at the bottom, right? We're completely bearish, but then you have this big, huge move to the upside like this, right? Because when I'm looking to enter, like to know the trend, like even down here, right? Like this move alone told me there's somebody wanting to change the trend, because usually, whenever, even if you just draw it out, right? If you draw it out, and let's say you have your move like this, right? You have your move, and then you're like, oh yeah, if they're showing you just on the chart, you're like, you have the pullback, right? You have the pullback like this, where price is moving slow, right? Like that. That's your trend, like this, and then you push again, right? And then your trend, your pullback like this, moving back in waves, right? Like this, and then you have your push again. Again, if you're bearish, you're doing the same thing. You have your big move, and then you have your pullback, right? And then you have your push to the downside. The same way, right? So usually I'm type of moves. When I'm like, if I'm looking at the chart like this, right, and I'm seeing this, I'm like, okay, I have a big move right here, big bullish move, right? So I'm automatically thinking, okay, this looks bullish, because the pullbacks, you see how now the pullbacks, the downward movement, you see how it's more choppy, right?
Yeah.
Like this is more choppy than when it starts trending up. But if after it pushed up right here, if we would have just seen something pull back, and then just like a completely just bearish move like that, would have been like, okay, like the bearish momentum is continuing. But then again, it happens. We get down here again to the volume zone down here, right? Right here, confirmation, and then we have this big push to the upside again, right? And then again, right here, when it starts to pull back right here, right? Right here, and then it starts pushing up again. You see how the bullish momentum is greater than the bearish one?
Yes.
Right? Okay, on this structure here, when we enter the trade, it's just, and this is exactly the same thing as you were talking about, right? So I have this big push, right? So I know that overall, this is a big bullish move right here, right? And this is my zone. But for anybody else watching, like, or even us, if we're trading, you see this push to the downside, you see this retracement, right? And then you see this push down here, and then you have this retracement right here, and this push right here, right? So far, this is the structure that is happening on the 4-hour for this past 3 weeks on March. That was the structure that was happening, right? We were on this bearish structure right here on the 4-hour with a lot of choppiness, knowing that this volume zone, once it happened, we were gonna make that push, right? So it was up here. So you see how this was the push down here, right?
Right.
But I know that I have this structure right here that was pulling it back, right, on the 4-hour bearish one right here. Even though I have this my previous higher high right here, right, and even though I have my volume zone down here, right, which was the initial buy, when we entered was right here, right, and the reason my candle was right here for my volume candle is because I know that this structure was holding, right. This structure was
Right.
holding here, so I needed my volume zone somewhere right here because when it was doing this and it was lower low, I mean lower high, and then lower low, lower high, right? This was the structure that it was pushing down. Technically here, right, it was supposed to keep pushing down. Right here, when it reached there, the next movement was supposed to push down right here again, right? Right here, because this is how people mark their setup. This is how people are marking the the whole market structure, right? And you see how it did start doing this rejection here. You see how we have this the bearish pin bar, and then you have this evening star here, right? Bullish um, pin bar, and then you have the bearish engulfing, right? So it was supposed to keep pushing down, but then it starts retracing, and then that's where you have that volume candle right there that breaks through it, right? So that's where I added, and like I said, this sort of structure, this sort of movements, you're gonna start seeing it more and more as the more you start trading a certain pair, and the more you start seeing the structure, you're gonna start seeing it and noticing, right? So on this
So
graph, you have the volume injected in the market that finally breaks through it because you had enough volume down here to start make this push movement. This was the initial volume because it reacted to this over here. But then right here, this is where the more order confirmation are going because they're waiting for more sellers to enter, right? There's no such thing as manipulation. It's just psychology. It's just reacting to everything that is going, right? So once it reaches down here and you have your initial buys and then you have your sellers right here entering again because the structure is looking bearish, right? And this is why I
right.
said that we need to understand complete market structure to completely know what is going on. Because this again right here, what people call manipulation, there's no such thing as manipulation because no manipulation is going on, right? Now that you see the market structure on completely what's happening, you know that this whole movement's here, right? This lower low, lower high, lower low, lower high, lower low, that this was still a bullish move, right?
Right. So right there on the 19th of March, like that push up, that'd be the volume zone,
The
like
what?
that first rejection. That push up on like the 19th of March, I think it is.
Right here.
If you move your thing over just a little bit.
I could barely hear you. What?
So like when you did your Fibonacci,
The
did you do it off the second push up?
Okay, the Fibonacci for the first move was here, right?
Yeah.
Right here.
Right.
This was the first move, right here, right? And then this candle here, that was a volume candle, right here. Right here, the Fibonacci is a little bit on top, right? But it was still holding this everything.
Right.
Like I said, sometimes, like maybe here, the zone would have been like the zone. Maybe you would have had a bigger candle, right, with a bigger zone like this, right? But in this case, the candle was not that big, so it didn't. It did help because it was still holding. Because see, even when it pushes above and then it retraces to 786 and then it pushes up, right? Right here, there's small movements here, and then it pushes up like that.
Right.
Hold on. Right? Okay, on this one here, you see how this is my first Fibonacci right here?
Yeah.
Well, that's what you were asking?
I was asking, do you put a Fibonacci on the second move,
Oh
or
yeah,
just
yeah,
the
yeah.
first one?
Yeah, because every time you start the second one, right? Your Fibonacci should always be on the previous move, right? So if you have this move, right? But this move already happened. If you already missed this entry here, then you have your Fibonacci here, right? Like right here, right? Because this is the previous move, right? And then, like I
Right.
said, have your volume zone here, right? If this is the volume zone, the broke structure, then, but like I said, this is me going more into detail, which I'm going to go more into detail, but I want you to focus on the main principle of it, because when I start showing this fast, people start to overcomplicate it, right? Like,
Right.
you're catching on, and that's completely fine, and I completely respect it, and that's why I'm showing you. But usually when I teach this far ahead, because these are just like little steps, right? Little steps that is going like a little, that you start to catch on, or that you start to notice throughout when you start doing it, right? And I don't like to teach it, because then once, if there's a student that I was teaching, and it's been multiple ones, that they start getting confused based on simple break of market structure. Like if it becomes bullish, they start confusing themselves, and they don't start understanding like even this simple method of knowing that there is multiple volume zones right here, right?
Right.
Even this simple ones like this, that is okay. I know that why this is a volume zone, but I know that this is a volume zone here too. They'll start getting confused, and they'll start not to understand why, right? So even though, like that, like I said, even though I like that you're catching on, like this year, for now, focus on this ones, the main ones, right? But yes, your Fibonacci should always be on the previous move, right? And then whenever you start like second guessing it, or thinking about it, right? So if you have your move here, right? And then you have your pullback, and then you have your new high, right? Your Fibonacci should always be chasing the previous move, right? Because you're trying to catch the next move. You're chasing the leg, right? Right here. So in this case, you have this previous leg right here, right? You have this previous move up here, and then let's say it starts retracing, right? It starts retracing right here, and then it pushes up, and then it falls down right here, right? Let's say you're watching it like this, right? And this is your buy right here. So your previous move, your initial one, was this one here, right? Right here. Because this is your Fibonacci. Your Fibonacci is from here to here. That's your Fibonacci, right? And then it pushes down, and then this is your move. And then it starts to retrace again right here, right? It starts to retrace again. So now your new move, like your Fibonacci, switches from right here where it was at
Yeah,
previously.
to the next leg, to that next move that broke the previous high.
Yeah. Always start moving it like that, right?
Right.
It's always your previous move. It's always your previous leg, because you're trying to catch that move. And like I said, it's knowing that, like, what what the previous move really is, right? Like knowing where it actually started moving, because even if you're
Right.
trading like on a downtrend or you're trading something else, right? You always want to catch those moves when it starts trending the other way, right? Because look, and this is what I mean here, right? Because you have your volume zone here that started that move to the upside, right? Right here. And you wait for confirmation. And the reason I wait for confirmation is because, okay, it breaks through it. And then I have my bullish pin bar. That was my entry, right? And even though it goes from 65 to, so like about 187 pips in profit, right? Even though the take profit was up here. I know that my next area of rejection is down here, right? And this is what I mean, that it confuses most people. They're like, how is there two volume zones, right? And it's good that you're understanding, because right here, my Fibonacci would have been from here to here, right? Like this.
Right.
And then, but I know that even if I entered and I'm like 200% profit, and then let's say I get stopped out like maybe 50, 60 pips in profit and I break even, right? Let's say that happens and then the trade goes down. And then when it comes down here, your Fibonacci just switches, right? Because
Right.
this is the whole move that you're analyzing like this.
Right. Okay. That answers that. Okay, that answers my question.
The what?
That answers my question.
Okay. But I'm really happy that you are catching on to those little things. Like I said, most people, it takes them a while to see them and to start understanding, but it's really good that you're this far ahead. Like I said, like once you start adding you to the groups, like I'm gonna add you to the most active group, and you start seeing everybody's perspective, and you're gonna start catching on more things.
Okay.
All right. So, and the trades you're taking, all of them, just keep a track record of it, or either screenshot it. Like if you're gonna take a trade, screenshot it like before, when you took it, and then just let it play out, and then just screenshot like the results of it. That way we can go over it. As if you get it wrong, we can go over it, and I can show you, or we can just go over it and see why it went wrong. And if you get it correct, you'll understand why you got it correct and everything you did right on that one, and you can compare it to the one you got wrong. All
Okay.
right.
Okay.
All right, man.
All right, man. Thank you.
Again, just message me through Telegram for any questions or any doubts.
All right. You have a good day.
All right. Talk to you soon.
All right. See you.
Bye bye.